Bloomberg is now on your dashboard. With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. It's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers.
Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. Let's flip gears. Let's head back to the geopolitics of it all and the impact it has on the market. The news coming out of Israel that I'm reading out on the Bloomberg terminal here, Israel and Hamas agreed to a short truce for hostage release. Hamas agrees to free 50 hostages, possibly more in days ahead. The deal would mark the first lull in the war since the attacks on October 7th. So I guess, if nothing else, that in and of itself is probably some good news. Bobby Ghosh joins us. He's an editor with Bloomberg Opinion. He joins us live here in our New York studio. Bobby, just to me, it feels like good news, maybe a little bit of thawing here. How do you read it?
I wouldn't go quite so far as to say that there's a thaw. It is good news.
Okay.
Look, it's great news for the hostages and their families. It gives ordinary civilians in Gaza a break from the bombing. It's a cessation of hostilities for 4 days. And Israel is already saying, Prime Minister Netanyahu is already saying, moment that ends, we go back to bombing Gaza. We go back to fighting Hamas. So there's, It's not really a thaw. It's a deal that was struck in Qatar with very strong pressure from the United States on all parties to make this happen. And we should thank God for small mercies, as they say. And as I said, for the people who are benefiting the most from this deal, the mercies are not small. They're quite substantial.
Absolutely. We're seeing 50 hostages from Gaza will be freed, and the release of 150 Palestinians who are in Israeli jails at the moment. But tell us, Bobby, because this is exactly what Israel has not wanted, in the sense that any pause is a chance for Hamas to regroup, get the military operations back together. This is that something to be feared then, that there could really be maybe an escalation in the violence after this?
I think this is why it's taken this long for the truce to happen. Israel had to be absolutely certain that the chances of Hamas regrouping and rearming were as small as possible. There's always that possibility, but Israel would not have made this deal if it didn't have a high degree of confidence that it can prevent that from happening, or it can manage how much Hamas rearms. Presumably this means it'll be paying much closer attention to the borders, much closer attention to those tunnels through Egypt to make sure that Hamas does not get it. And it has already wrought so much damage on Hamas infrastructure that there must be a high degree of confidence that, Hamas's arms-making facilities in Gaza City, for instance, will not easily be revived in 4 days.
Okay, so that's kind of where I wanted to go, because I know that the stated objective of Israel is to destroy Hamas and its leadership. Yeah. How do you define that? How do you know when it's happened? I kind of fear it's like the drug cartel. You take out one kingpin and then the next person just rises right up again.
Yeah, this is they're not fighting a conventional military. Right. This is a terrorist group. The leadership can change and has changed. Israel has a long history of taking out top Hamas leaders. The thing just keeps coming back. And you also have to remember that in the process of trying to eliminate Hamas in this way, it's also creating the circumstances for Hamas to be able to recruit.
Yeah,
You've got hundreds of thousands of young Palestinians in Gaza and elsewhere who are outraged by what they see, and a small proportion of that population will be more amenable to joining Hamas now, shall we say, than they were before. So it's, this is not the kind of war which ends with people signing an armistice and making a peace deal. And that's been the problem. The Biden administration has said consistently from the beginning that they've been asking the Israelis to define what victory looks like and explain what happens the day after. And until now, the Israelis have not provided that information. They've not communicated it in private to the Biden administration. They certainly have not communicated it publicly.
And of course, whatever that timeline may be as well is probably pretty daunting to think of, like the task ahead, how long that may take. Makes me wonder if there could be perhaps the need for more ceasefires in the time to get to that endpoint.
Yeah, so we'll see if this one works. And everybody shows good faith, and that then hopefully creates the circumstances for another one down the line and another one, and maybe this is the kind of conflict where, because everyone is so painted into their own corners or the opposite ends of the room, that the advances that can only be incremental. It might be that this is the only way, slow, painful, deadly as it is, this might be the only way we begin to move towards some kind of resolution.
Is there a scenario where Israel does not end up occupying Gaza? I can't think of a scenario where they don't, to preserve the peace. I mean, does the UN play a role? I mean, what do we think about the day after?
Well, so here's the thing. Now, Israel has signaled that it is willing to do that in order to make sure Hamas does not come back. But this is not a popular idea among Israelis.
Right.
For a start, Israelis don't want an occupation of Gaza because they know what that will entail, not just in terms of costs, but also the risks that come with that. Nobody else wants to do that. Nobody else wants to perform that role. I don't think any Western peacekeepers would have credibility there. The United Nations will eventually have to play a role, but until now, Secretary General Guterres has been sort of saying, look, this is not going to become a protectorate of the United Nations. The Arab countries who would logically be part of the biggest part of any peacekeeping effort, their view is, why should we clean up Israel's mess? This can't become a thing where you go in and bomb Palestine or parts of Palestinian territories to smithereens and expect us to come and clean it up for you afterwards. So there's going to be a lot of reluctance. The crucial question for everybody is peacekeeping toward what end? Mm-hmm. If there is a clear path after the fighting is over for a two-state solution, then I can see, and there are sort of cast iron guarantees to that, then I can see the Arab states saying, all right, we'll take some of this responsibility if there's a clear path that this never happens again.
All right, so on that two-state solution, who is the biggest impediment to that actually happening at this point, do you think?
I mean, there's so many impediments, and at different times their relative weight changes. But Israel is an impediment. The current administration in Israel, the coalition government that Benjamin Netanyahu has put together, has no interest in a two-state solution. Many of his partners have openly said that's not what they want, that they will oppose it. The Palestinian Authority, which is deeply corrupt, completely inept, and has not dared to test its popularity with an election in years and years and years, they are an impediment. And of course, Hamas. And Hamas's enablers. Iran is a very big part of the peace problem too. So yeah, a problem this intractable and this complicated, there are lots of people who have to share the blame.
Just really quickly here, Bobby, in our last 30, if you could just explain to us what this second stage could look like with a possible extension to free more hostages.
Well, so there's some talk that after these 50, if Hamas continues to release hostages in a sort of steady sort of 10 a day, 15 a day, then there's some hope that the cessation of hostilities, the truce, can be extended. Again, this is something we should all hope for and keep our fingers crossed that it happens. But we'll believe it when it happens.
Yep, absolutely. All right, Bobby, thank you so much for joining us. Bobby Ghosh, he's a columnist for Bloomberg Opinion. He's got a tremendous amount of experience in international affairs reporting, certainly in that part of the world over there in the Middle East. We appreciate getting a few minutes of his time here.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
All right, let's round table this OpenAI. I'm going to call it a debacle, and that's editorializing, but it just seems to me it's a debacle, and I think Silicon Valley should be embarrassed by what's happened over the last 4 or 5 days. But we're going to bring in some smart people who analyze this stuff much better than I do. Mandeep Singh, he's a senior tech analyst from Bloomberg Intelligence. Ed Ludlow, Bloomberg Technology host out in San Francisco, so that he has to take some of the blame because he's part of the culture out there. Ed, I guess we have Sam Altman going back to OpenAI. I guess that's good news. The next question I think most people have is, who's going to be on this board, and will it be an effective board?
Yeah. The mechanics of it are that Brett Taylor, who was once the co-CEO of Salesforce, but I guess he's more famous for being the chairman of Twitter that sold to Elon Musk, is taking a board seat. Then you have Larry Summers, well known to this program, this network. Reminder that Larry Summers is a paid contributor to Bloomberg Television. I'm supposed to say that.
Sure.
And then beyond that, the news for me is that, and this is, we've covered the ins and outs of the negotiation pretty closely, right, guys? That I know that Sam Altman and Greg Brockman were pushing really hard to get at least temporary board seats in this whole thing, but they didn't. So this thing's far from settled. The reason I'm late, and I apologize for that, is I was on the phone with a source who's involved in all of this, and Sam Altman goes back. Most people get what they wanted, but it ain't the end of the story. There's a lot we still have to find out.
Well, I would like to bring in Mandeep here because this has been, as Paul said, a very chaotic 4 or 5 days. And for those of us who are maybe just joining, Mandeep, if you could take us back to when Sam Altman was suddenly ousted from OpenAI. Again, I don't think we have really a reason yet as to why that happened, but maybe if you could give us a timeline of what has transpired from then to now.
Well, clearly, it was a shocker to everyone in terms of the way he was ousted, and there wasn't any transparency around the reasons. In fact, when they made the 3 new board member announcement today, they said there will be an independent investigation. So clearly, there's a lot to unpack, as Ed was alluding to. But look, for a company like OpenAI that has a convoluted structure, so last week I think it came into focus that they have a profit structure within a nonprofit. And now we are trying to, make sense of what would a good governance structure look like. We have 3 board members. We know this is pretty unusual, the CEO not being on the board. So if Sam is going back to be the CEO and he's not on the board, who the other board members are, there's so much to, talk about here. And this is not the way it's going to pan out. The reason why no one cared until last week is because, OpenAI was a startup and, it had the backing of Microsoft. So corporate governance wasn't as big of a focus, but the way he was ousted, it's like, this is so unusual. And I'm sure a lot of the startups are thinking about their corporate structure now, and their backers, the VCs and the early investors.
Ed, what are you hearing from your sources out there as to maybe the impact on the value of this company here? Has it been really impacted negatively, and how so?
I love this question. For me, this is the question, because the story of the last 5 days is that OpenAI's valuation, which right now, based on a transaction we can get into that's pending, is $86 billion. I reported a couple of months ago, revenue has a run rate of about $1 billion for this year. $1 billion of sales, $86 billion valuation.
Wow.
And the basics of this for the audience listening all around the world is, we care because OpenAI is the leading AI startup. Let's just accept that as a baseline. What we learned is that its value is intimately tied to the intellectual capital that's there. In other words, Sam Altman, Greg Brockman, and the 768 other people that work there, all of them started a mutiny to try and bring Sam back. They were successful. but there was a real threat that all 770 employees would just resign. They would just leave. Then what are you left with? A very large building in downtown San Francisco with incredible compute costs and no one in it. That's the way to frame it, right? I don't think that that's unreasonable. And sources this morning keep phoning me and saying, that's the story. Like, on paper, the people behind this, there aren't that many of them. And I think, sorry guys, I jump in, but for me, that's the kind of key point.
Yeah, no, I think that's spot on. And Mandeep, maybe you can help us, break down this math a little bit here. As as we're just hearing that we've got $1 billion in revenue to an $86 billion valuation. I mean, my head is spinning. Does that make sense to you?
Well, so look at, all the startups, and you can go back in time in terms of, the companies that have ridden these technology waves. There is that promise, okay, if you have a breakthrough technology, investors don't really focus that much on the revenue that you have right now, but the potential. And
Isn't that WeWork's problem?
Well, I think this is different. OpenAI does have an intellectual property, and they are foundational. I mean, think of NVIDIA, right? They are foundational to what is going on in AI with their chips. Well, this is another foundational element in terms of, a lot of companies are standardizing on OpenAI's base model, and they have embedded it in their tech stack. Everything is happening on top of what OpenAI is offering at the baseline in terms of a large language model. But now I think it puts doubts in the mind, because think of operating system. Like Windows operating system was the standard on which all these applications were built. OpenAI had that kind of aura. And suddenly that has put doubts, and that's why there was this high valuation. So I'm not surprised by the valuation, but the chain of events has kind of put doubts in people's mind right now.
Hey, Ed, to be honest, before this, I really didn't know who Sam Altman was, and I certainly wasn't aware of the presence he really does command within the tech space and within Silicon Valley.
Right.
How do you think, where does he go from here? I mean, it seems like he's going to be the focus of, now I'm going to pay attention to whatever he says and does going forward. I mean, his role in all of this, it's taken a much higher profile.
Yeah, look, Sam Altman is a serial entrepreneur, a serial founder. He has been a name out here in Silicon Valley for some time. He has really been thrust to prominence as OpenAI became the face of AI. That's the reality of it in the last year. He's just beloved by the OpenAI staff. I'm not exaggerating. Almost the entirety of OpenAI's entire company threatened to resign if he was not brought back. The investors love him. The investors were adamant that he came back and that they were behind the scenes trying to do that, including Microsoft, right? Satya Nadella, the Microsoft CEO, was a real peace broker in all of this, we understand. And yet, this is why I say that this story is not finished. There will be an independent investigation as to why the board fired him in the first place. We have got no idea, to be frank, why they did that. I just, without being self-serving, I did report on Saturday as an example that he was out there within the last few weeks, raising almost $100 billion for a new chip company to take on NVIDIA, make custom silicon for training AI models. $100 billion from a standing start. That's the kind of command he has, and the investors like SoftBank, Mubadala, they were willing to jump in.
The one thing I would point out is, whenever a founder gets more attention than the company, that's never a good thing. If you go back in time, the focus is just on the founder and what he's doing. That hasn't been viewed very well by the investors. And if they are thinking about doing an IPO, that's the last thing you want, is the founder getting all the focus and taking the focus away from the core product, which is the large language model they have developed.
Could say it sounds like another Sam, perhaps, of FTX.
I hope now we're not even going to go there. Yes. Ed Ludlow, thank you so much for joining us. Ed Ludlow, he's in our San Francisco office. He is embedded in that Silicon Valley space. And then Mandeep Singh, he's our senior technology analyst here at Bloomberg Intelligence. He's seen it all. He's seen the tech come and go. He's seen the tech moguls come and go. So we appreciate getting their perspective. So it seems like it's quieting down there in Silicon Valley in OpenAI. And now we'll just see how it's kind of fleshes out the board and some governance issues and some ownership. And but I guess the
Easy
last 5
things.
days, it's just kind of like a do-over. So we'll keep on top of that.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Sri-Kumar. He's the president of Sri-Kumar Global Strategies, former chief global strategist and chairman at Asset Allocation Committee at TCW Group, a little asset manager out there in LA. But the highlight on his extensive resume for me, former senior vice president at Drexel, Burnham, Lambert. Those folks, they were slinging it back in the day. They were slinging it back in the day, folks. Sri, thanks so much for joining us. You're based out in LA, but you're in New York, so we appreciate you coming in here to our New York studio. Talk to us about how you view 2023. We're closing out a pretty decent year here for most markets here. Closing out 2023 and how you're thinking about 2024.
Paul, great questions. And I think 2023 we had expected by now to be in recession, which has not come.
Yep.
The labor market is very strong. The consumer spending is very strong. I think what was underestimated was the extent of stimulus there was in the system, both in terms of the fiscal stimulus, which came from the final months of the Trump administration, first few months of the Biden administration. And don't forget, the balance sheet of the Federal Reserve doubled from bloated levels from the beginning of COVID to the beginning of 2022. And we had zero interest rates for a long period of time. So everybody loaded up, and 1.5 years later, after the tightening began, I think we are still not back yet. But the point I make and I say to my clients is that recession is something that has been postponed, but it's been delayed, but it's not denied. So I think we are still going to see signs of a recession. And what worries me the most is as you have interest rates having risen and the balance sheet of the Fed is still being tightened. It did not pause. And when the two of them go together, that there is something that's going to break in the system in the first half of 2024.
So how do you then distinguish between what a lot of people will say right now are signs that we're heading toward a soft landing and that you're in the camp here that recession is still a possibility?
Yeah, I do not believe in soft landing, Molly. And I would think that when you look at what has happened in past history, it all looks very nice until the thing gets out of control. It happened with 2007. And toward the end of the year, we had the Fed chairman, Ben Bernanke, say to us that the subprime mortgage situation was just a $50 to $100 billion problem. We found out in the next year, 2008, it was just a terrible situation, not just a minor problem. Same thing happened in 1998 when you had long-term capital management, a small hedge fund, which was never going to fail because 2 Nobel Prize winners ran it.
Ex-Salomon Brothers.
Right?
Thank you.
And it was done with, again, with no leverage, it was thought, but then they had enormous amount of leverage and a lot of risk, and it failed as well. So it is all, I like to say that it is all lit up until it darkens, the opposite of what we normally say.
Is there some event out there that you're concerned could be that long-term capital management moment, or could be the subprime issue for in 2007, 2000? Is there something out there that concerns you in terms of catalyst?
Paul, I have a few candidates. One is I had said before the March regional banking crisis there might be a credit event, but we survived that. It was a credit event. The next one, my top candidate, is a bigger banking institution, maybe an institution which is medium-sized. And why do they suffer? They suffer because they loaded up on long-dated bonds when Jerome Powell told us inflation is going to be transitory. So in that case, I should buy 10-year treasuries at 2% because I'm expecting it to go to 1%, right? It didn't. It went the other way. So that's one candidate.
Wouldn't that have already happened, though, by now? If that were to blow up, similar to the small banks that we saw in March?
Not yet, Molly, and I'll tell you why I think it hasn't happened yet. If you look at the bank numbers, the deposits with the U.S. banking system has been steadily going down. The delinquency rate is starting to pick up, and the balance sheet is being reduced as far as the Fed is concerned. When you put them all together, suddenly something clicks. It doesn't happen gradually. So which is why I think timing-wise, I would look for the first quarter of 2024 is when something breaks again. So we talked about commercial real estate as the third. You can also have, again, a crunch on the credit side, which is already taking place. My final candidate is a repeat of what happened in the United Kingdom. September, October of 2022, bond yields rise a lot. There it was the gilt yields, and here we are talking about treasury yields, and pension funds incur huge losses. They have not done well in terms of general performance, and that situation worsens and puts pressure on the Fed.
One of the things as we think about this economy in a hard landing, soft landing recession is the labor market. And we got some more labor data today. Initial jobless claims came in at 209,000, below expectations, less than we saw last month. I mean, this labor market seems to defy most logic in how robust it is. What do you make of the U.S. labor market?
Yes, the labor market so far has been very robust, and I think the reason that has been the case, once again, traces back to the amount of stimulus. There is so much money that you were able to give. And also the shortage of labor, which took place due to COVID, with one part of the working force, typically the wives, who stayed behind to provide childcare. That in turn reduced the workforce. I think we are just coming back to it. But if you look at the layoff numbers, Paul, you're seeing that after a period of very strong numbers, despite today's initial jobless claims, the unemployment has started to rise.
Yep.
And they don't, once again, it doesn't rise gradually. And history tells you that when it rises, it just surges suddenly. And I wouldn't be surprised to see that happen in the next 2 to 3 months.
So let's go back to these stimulus payments, because there right now is such a debate in economic circles of how much excess savings the consumer has. I feel like I see a different report on this every day, that savings are dwindling, there's nothing left. Another one will say there's more than we really thought, and that's what's giving the consumer still a lot of gas right now to keep spending. And same with on the credit side as well. You mentioned delinquencies are picking up, and we've seen credit card balances getting higher, but as a share of total deposits, still very low. So how do you assess right now these conflicting messages about the health of the consumer?
That's again a very timely question. And I would answer you, Molly, by saying that while the aggregate numbers in terms of delinquency, the aggregate numbers still seem really benign. There is a difference across income groups, meaning the numbers are showing recently that even the consumer spending, a good chunk of the increase is coming from the highest 1 or 10% maximum in terms of the income groups. And the lower income groups are actually cutting back. Delinquency-wise, the credit card delinquencies are the first to show up. And the reason is it is easy for you not to pay. You don't have to go and ask anybody to give you a loan. And so that is starting to happen. The next, if it starts to happen also in terms of what happens to the payments to the banks, then I would be even more concerned. But it is already happening with low middle income groups. It's not happening yet with the high income groups.
Hey, Sri, about 30 seconds left. A lot of geopolitical issues out there for the investors to deal with. How concerned are you with, again, the Middle East and Ukraine and what that means for maybe the global economy?
I'm concerned, again, to reply to you very quickly, Paul, that I'm concerned mostly from an economic side in what happens to inflation.
Okay.
And yes, today we are seeing a big drop in oil prices, but if the Hamas-Israel ceasefire doesn't happen, or if it breaks up, then you're talking about war escalating, and that in turn would mean much higher oil prices. Oil prices are a nothing or a huge problem, one extreme or the other. It either goes down or the oil price goes to $150 a barrel, and that's a risk we run for the geopolitical situation.
Absolutely. Sri, thanks you so much for joining us. Sri-Kumar, he's the president of Sri-Kumar Global Strategies, based somewhere out in California, one of those beaches or something like that, but he's actually coming to the world capital, New York City, so we appreciate him coming into our Bloomberg Interactive Brokers studio.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Earnings. Deere. They put out some numbers. I guess the beat current quarter results, but their guidance was very disappointing to the street. I see the stock's off about 3.5%, but that's the high, intraday high of the day, so it had been a lot lower earlier. Let's bring on the analyst who follows this company, Chris Ciolino. He's the industrials analyst for Bloomberg Intelligence, joining us via Zoom from Princeton, New Jersey. So, Chris, talk to us about what we heard from your good friends at Deere.
Fairly conservative guidance heading into the print, just given what we've seen with softer commodity prices, lower farm income, and I think it was pretty well anticipated that the cycle was turning. But this outlook is materially below what we had anticipated. Deere's projecting net income will drop to about $8 billion at the midpoint next year. That implies roughly $28.50 in earnings, which is 13% below the street. Commodity prices are still at historically high levels above long-term averages. The age of the fleet is still quite old, and farmer balance sheets are quite healthy. So we really see a more modest downturn. This really sets just a low bar and really an overly conservative outlook.
And it looks like, this sector here, Chris, is otherwise showing some other evidence of slowing. We saw that the rival over to Deere, CNH Industrial, said that it's reducing salaried workers, that their equipment sales are slumping. And Corteva, which makes seeds, has also warned of a slowdown in demand from farmers. So tell us, the broader outlook of the farming sector right now and really why people should be paying attention.
Yeah, I mean, we hit peak production this past year. So 2024 will be a slower or lower growth year. This has been kind of well advertised by the pullback we've seen in commodity prices. CNH certainly cautioned when they reported that volumes will be down in 2024. And we actually saw Deere reduce production too at their Harvester Works factory in their fiscal 4Q. In North America, inventories seem to be in good condition, but as you look globally, Europe, and particularly South America, they plan to underproduce retail demand next year, so further production cuts to come.
What's the lead time? Talk to us about the cycle for a company like Deere. I know it's a cyclical business and it's based upon farming, but just describe the cycle for us.
Yeah, I mean, ultimately they're driven by where crop prices are, and that ultimately dictates farmer incomes. We've had 3 very strong years here in North America. So we were roughly 30% above mid-cycle in 2023, which was, pretty comparable to the 2013 peak. Again, it comes down to where crop prices are. They're still, supportive of making capital investments, just not at the level we had seen over the last 2 years.
Tell us, Chris, about some other markets that are really important for the farming space, that, Brazil probably being one of them, and maybe some other regions in the world that are really important when we're thinking about the outlook for farming.
Yeah, if you think about the markets that matter most for Deere, it's North America and it's Brazil. Those are the larger crop producing nations. They are more conducive to the larger high horsepower equipment, which drives higher margins for Deere. And ultimately it is corn, soybeans, and wheat. Those are what really move the needle.
All right, Chris, I'm a farmer. I'm in Moline, Illinois. How often do I replace those big tractors that I love to drive to help me, get my crops out of the ground?
Yeah, so if you think about a piece of large farm equipment, typically the useful life runs about 15 years.
Really?
But that includes a pretty robust trade cycle of 4 or 5 different users. Some of the larger operations will swap out equipment more frequently, just given some of the technology and upgrades. Really make farmers more productive and help lower some of the input costs. And combines, tend to have a little bit shorter useful life, used a little bit more intensively, particularly down in regions like South America.
So what's a combine? If I'm going to get one of those big combines that I see, with the big cabs and they got all the bells and whistles, what's that going to set me back?
You're going to have to break out the wallet.
Okay.
A large combine could run, close to $1 million with all the bells and whistles and the new technology. They are a large capital investment.
And so I have to finance that, right? So if I got interest rates, they're no longer zero. So it's just like buying a car, isn't it? It's a lot more expensive.
It is, but interestingly enough, we've seen higher interest rates, to this point really haven't had a detrimental impact on equipment sales. And I think a lot of that has to do with, crop prices were, historically elevated, farm income, we set a record in 2022. So farmers have had a lot of money in their wallets, and we've actually seen a lot of farmers go out and buy equipment with cash. The exception being more at the smaller end, more consumer-driven products. Those had historically been a little bit more rate sensitive. That being said, now with the pullback in crop prices and lower farm incomes, you're starting to see some of that interest rate sensitivity deteriorate some of the buying power for the larger operations.
Let's go back to the Deere earnings call that happened earlier today. Management brought up labor costs a lot as mentioning that this is the largest inflationary item within their production bucket and that a lot of it is contractual, mentioning that the labor contracts that they have in their factories have these scheduled step-ups in the year. So is that saying that labor costs are going to get even more expensive for Deere?
Yes. That being said, production costs we actually saw for the first time in 3 years this fiscal quarter turned into a tailwind. So while labor costs are going up, other costs are coming down, which is helping mitigate some of those higher labor inflationary pressures. So net, they're anticipating 2024 that production costs will actually be a tailwind.
So how's the supply chain here? I mean, I know for a while there, like the automobile industry, the industrial equipment guys couldn't get the chips. They couldn't get some of the parts they need to build these things. How is the supply chain these days?
The supply base has, really normalized. It really is not a factor at this point anymore. There are pockets from time to time, but we've seen a normalized supply chain. I'd expect you get a little bit of tailwind, some factory efficiencies as we move into next year, but it's normal course of business.
A lot of times when we see companies set really low guidance, my initial reaction, and maybe this is just the cynical person in me, is thinking, setting the bar low so that they can, what's that phrase, to under-expect, outperform?
Yeah, under-promise, over-deliver.
That's there. Thank you. I knew you would say it better than me. Is that, Chris, what you think is happening here, or it really is as dire as Deere is making it out to be?
No, I think that's exactly what's happening here. I think they set a very low bar, and I wouldn't be surprised to see beats and raises throughout the year. We had anticipated fairly conservative guidance, just given some of the macro uncertainty, farm economy uncertainty. So that was to be expected. But to see, double-digit top-line declines across all businesses, pretty heavy decremental margins, 35% plus. That's more indicative of a more severe contraction. We just don't see that as a realistic scenario at this stage.
I remember when Chris was young and he wasn't so cynical, he would take management's guidance at face value, but now he's calling them out, saying maybe they're kind of throwing in the kitchen sink here.
I'm with him.
That's a mark of a good analyst. He's become a great analyst for us. Chris Ciolino, industrials analyst at Bloomberg Intelligence. He follows all the fun companies, I think, like Deere. He gets to ride around on tractors and stuff like that.
Is that part of the job?
Oh, yeah. You go to an analyst day, you got to check out the merch. So they it's awesome.
Okay.
Yeah, so it's good stuff. They have a good time. Now, my job was better because I used to get to go to movie premieres for the media companies,
Disney, and
go out on cruise ships with Disney and all that kind of fun stuff. So
and now you're here in the office.
Now I'm here.
One of the biggest in-person office proponents I've ever met.
Exactly, and I've thrown in the towel on that. I've learned. I've kind of figured it all out. My kids are saying, forget about it. You've lost that fight.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.